Welcome back. With Bitcoin nearing all-time record highs again, with other cryptos as well. There is a lot to take in, and in my view, may be the time to flip bullish. Not fully, but in today's video, we're going to be exploring which cryptos we need to be looking at to the upside, which cryptos we need to be looking at from the downside. We're going to be talking about Chainlink, XRP, Bitcoin, Ethereum, Internet Computer, Cardano's Midnight coin, and we're also going to talk about the AI stock plays. This is the Cryptoviser podcast. Make sure you guys are subscribed to the channel. We upload every single day on this channel to bring you the latest happening in the financial world. Sometimes we talk about individual cryptos and we do deep dives. And sometimes we talk about the macro environment. We talk about all the different cryptos to understand where we should invest, how we should invest. And remember, nothing I say is financial advice. These are just my opinions, my analysis, and understanding of the market. And so now we are in Q4. We are at the 18-month time frame after the Bitcoin halving occurred in April of 2024. And as you guys know, based on historical data from the previous two cycles, 18 months marks the top of the market. Now, I've been calling the top of the market since the middle of 2025, and a lot of people have been saying, Cryptoviser, you're an idiot. Cryptoviser, you're wrong. Cryptoviser, we're going higher. Well, now that we are reaching and hitting all-time record highs once again, let's explore where we are now in October and moving into November and December. And so as you guys can see, this is the crypto price since all-time highs. This column shows us the price. This column shows us the all-time record. And then this shows us the date that the all-time high was hit. And so what we see is that technically I was correct. Okay, I called the top of the market in June and July of 2025. And I kept telling my viewers, effectively, we hit the top of the market. We hit peak euphoria with all these Ethereum strategy companies popping up and saying that they're going to buy, billions of dollars of Ethereum. We have the Bitcoin treasury companies like Nakamoto, Sequence, ProCap, all of these different ones starting to pop up in the middle of the year. In my view, and by the way, we even had real estate investors like the Cardones switching in the middle of the year, saying we're going to sell our real estate and buy Bitcoin, sell our real estate and buy crypto. And so that to me is peak euphoria in the markets. But that doesn't mean that it's the end of the cycle. It just means that it's really the fundamental top of the market. But everything after that is volatility. And even in the 2021 cycle, everything after pretty much August of 2021 was just volatility. It was just end of cycle volatility. And we don't know how high it's going to go, and we don't know how long it's going to go for. And so as a non-emotional investor, you don't want to be in that volatility trade trying to get out of your positions. You want to call a top, get out of a position, and then just trade the volatility, which is what a lot of these insiders are doing with these companies. We've talked about this with the Bitcoin treasury companies. I mean, just look at Nakamoto. Nakamoto went down from like $5 down to $1 because the insiders, once their shares got unlocked, they started selling their shares. We also are seeing companies like Bakkt Holdings, which started in 2018 or something like that by the Intercontinental Exchange, which owns the stock exchange, New York Stock Exchange. They started this company called Bakkt. And basically Bakkt was promising that they were going to have a crypto app and it was going to be crypto rewards. You're going to go to Starbucks and be able to buy things with crypto rewards. None of that ended up working out. And as you guys can see, the company peaked again, the top of the market in 2021 was effectively August for most of the crypto. And then it was just volatility after that. And then you can see in October, the stock price went from $230 to $1,000. I think this is stock split adjusted. And then it came down and you can see where we are today. But then just this year, right, we went from $8 all the way up to $45. That is the banana zone. That is, and this was literally just based on Bakkt mentioning that they were hiring this guy, Mike Alfred, who's he's an investor in like these Bitcoin mining companies that pivoted to AI. And just the announcement of him going on their board as an advisor, the stock went up 5, 6x just based on that announcement, right? But what exactly does Bakkt do, right? I mean, I still don't know exactly what Bakkt does. And so this idea that we're not in the volatility phase, we're not at the end stages of the cycle, I don't know. It kind of looks that way because Bakkt is moving up just based on an announcement of a new advisor on their board, but nothing actually happened. With the Ethereum strategy companies like Bitmine and SharpLink and ETHZilla, they wanted to follow the Bitcoin treasury companies like MicroStrategy by selling shares in the open market to then go and buy more Ethereum. But if you look at what happened in September, really Bitmine was the only company that purchased about 800, 900,000 Ethereum. And these were all done off chain on private sales. So they just go to early holders that want to offload their coins and get the cash. And they say, give us your Ethereum, we'll give you the cash. And it's like a private sale. So it never actually hits the order books and never actually pushes the price up substantially. And so everybody's saying, but Cryptoviser, Wall Street is buying. Wall Street is buying. Yeah, they are, but they're not buying in the way that you and I are buying on the open market, which moves the price. And that's a big thing to keep in mind. And so when we look at when these all-time highs were hit for most of the top 10 or top 50 cryptos, let's take a look. So you can see Bitcoin and Ethereum both hit their highs. Forget about October, okay? I'm just talking about pre-October in August. XRP hit its high in July. Tether is a stable coin, so it doesn't count. BNB hit it in early October, but we're ignoring October for now. Solana hit its high in January of 2025. What was in January? That was the meme coin, celebrity coin, Argentina coin fiasco that was going on, where they were extracting money from the market. Dogecoin hasn't even hit its all-time record high in 2025. Tron hit the high in 2024. Cardano 2021. Chainlink 2021. Hyperliquid September, right? But that's because we had Aster launching and all of this derivative pumps. But I remind you, derivatives is not, you're trading not the actual crypto. So the only people who actually do make money in that kind of trade is the platforms like Hyperliquid and like Aster, right? The market doesn't actually make money from that and doesn't benefit from that kind of trading. Derivative trading is all like, as they call degen trading. It's not real trading. It's not real fundamental value in the ecosystem. And when this occurs, this typically tells you end of cycle. The same thing we saw with Solana when it hit its all-time high in January of 2025. That was degen trading on the Argentina coin and the Hoktua coin and all these other celebrity coins that they said they were going to change the world and it was going to be the best thing ever. And all of them went to zero. All of them. They have no value. And so Avalanche 2021, SWI January 2025, right? Same time Solana jumped. Stellar, I mean, it's been 2 cycles since it hit its all-time high. Which other coins? Hedera hasn't hit its all-time high since 2021. Litecoin 2021. So as you guys can see here, a lot of these coins haven't even hit their all-time highs from the previous cycle or the cycle before that. And the only coins that are really hitting all-time highs are the newer coins like Hyperliquid, like Aster, like SWI, like Solana. But that's pretty much it. And this idea that now at the end stages, at the 18 months after the cycle, that we're going to hit all these highs, this is possible. But let's kind of discuss a little bit more in depth. And by the way, this guy, Joe Carlisle, who is a commercial litigator supporting Bitcoin, he said, for those calling for a $200,000 Bitcoin by the end of 2025, here are a few things to consider. We're still about $80,000 away from $200,000, which is basic math. There are only 90 days left in the year, roughly 60 when CME is open. Meaning the CME is derivative exchanges and it's only open during the week. Weekends, they're not open, right? Or holidays. Bitcoin would need to average a daily move of $850 with virtually no pullbacks or periods of consolidation, which he says is very unlikely. Bitcoin rarely sustained that pace of appreciation over a 3-month period, even in its strongest bull runs. Only a couple of examples pre 2018. And this is very important to keep in mind because before 2018, there were only 3 or 4 coins. There was only Bitcoin, Ethereum, XRP, and that's basically it, right? 2017, the bull run, was because we had fork after fork after fork and launch of coin after launch of coin after launch of coin. But now there's millions of coins. He says, as the price increases, market cap growth becomes exponentially harder, requiring billions in fresh capital inflows as new sellers are unlocked between $150,000 and $190,000. Because as I've explained on this channel, I would agree with a lot of what he says here, but we've talked about this, that you may be waiting for $200,000, $300,000, $400,000, right? But the smart money is front running all of y'all, all of you. So and go look at Dogecoin in 2021. Everybody thought it was going to hit $1 because Elon Musk was going on Saturday Night Live and wanted him to pump it on the show. Number one, he didn't pump it on the show. And number two, the insiders sold at 75 cents and we never hit $1. So that is, you really have to keep in mind. But this brings us to some of the other coins that I still think have the potential to do very well, at least in the medium term, right? Maybe not in 2025, but definitely within the next year or so. And one of them is Chainlink. As you guys know, Chainlink continues to grow. It's Chainlink Reserve. And as of the date I'm recording this video, as October 2nd, Chainlink Reserve now holds 417,000 Link coins. Why are they buying back their own coin? Number one, so the price goes up. Number two, because then in the future they can use these coins to help fund and develop and grow the ecosystem. And it's very important that you guys are paying attention to what's going on here with Chainlink specifically, because it has a lot to do with what is also happening or not happening with XRP. Swift is testing a blockchain ledger with 30 plus banks. What this means for XRP. International payments need a fresh coat of paint. Swift, MoneyGram, Western Union are slow and too expensive. Many investors see XRP and the integrated RippleNet service as the obvious answer. But is this really what's happening? Well, we are now hearing from Brad Garlinghouse responding to Swift banking announcement. Now, what banking announcement? Let's first understand what's going on here. Ripple's CEO Brad Garlinghouse pushed back against Swift announcement of a blockchain-based shared ledger prototype, arguing the move looks more like publicity stunt than a true leap forward for financial technology. His remarks, shared in a recent shareholder letter, which I'm going to read to you guys, and explained by Jake Claver, the CEO of Digital Ascension Group, have reignited the debate over Ripple's dominance in the cross-border payment space. In a video shared here on a podcast, the guy Jake broke down Garlinghouse's reaction to the XRP community. He explained that the Ripple's chief views Swift's prototype as more of a marketing strategy, particularly timed to generate buzz ahead of the Sibos conference. Now, I want you guys to keep this in mind. For years, the Ripple ecosystem believed that they're going to take over Swift. They're going to integrate with Swift. Swift has they have no incentive to implement XRP at all. And even if they implement RippleNet, RippleNet is not XRP and it doesn't need the usage of XRP. Number two, Ripple continues to sell XRP on the open market, and the XRP army is either blind, oblivious, or just don't care about that, which that's a huge problem. But this idea that Swift is like just making a marketing ploy and that they're going to choose XRP anyway, it's like they're holding you on the hook, right? And at the end of the day, at some points in investing, you have to say, I need to exit this trade, because XRP did hit all-time record high this cycle in 2025 when I called the top of the market. A lot of these other legacy coins have not, as we went over earlier in the video. And so it's being a lot of the anticipation in XRP is because people believe that now that they don't have the lawsuit and the Securities and Exchange Commission is off Ripple's back, that they're just going to get integrated with all these other systems in the banks. But what incentive do these banks have to use Ripple or use XRP? And even if they use Ripple, they're not using XRP. Well, I want you guys to hear what Brad responded. So this is breaking. Ripple's CEO responds to the Swift banking announcement. It says Swift announced it has built a prototype for blockchain-based shared ledger to be added to the infrastructure stack, initially focusing on real-time cross-border payments. I've received a number of questions this week about this and what it means for the industry in Ripple. Frankly, it made me realize I haven't shared enough recently about the thoughts I have around who we view as our core competitors. And perhaps I will spend more time on the competitive landscape in an upcoming note. I digress. It's true, in the early days, we did view Swift as a major competitor, but the reality is, in the time it's taken for them to announce a prototype, we've been building robust digital asset infrastructure, expanding our payments product to custody or from our payments product to custody stablecoins, and development on the XRP ledger, and more with recent acquisitions. Also, we've dug into the Swift news, and it seems like this is a marketing play in the lead up to their annual Sibos conference, rather than any actual meaningful product announcement. That said a lot without saying really anything. I mean, at the end of the day, they do have a lot of investors, but I never hear these investors questioning why they keep selling XRP, how they're going to increase the usage of XRP, how they're going to increase the price of XRP, because Ripple is not XRP. They have made that very clear in their lawsuits and all of these, the issue with the SEC. They've made it clear XRP is not Ripple and Ripple's not XRP. These are two different things. And hearing Swift coming up with their own cross-border payment, and by the way, Swift is integrating Chainlink. It's not like they're integrating XRP or Ripple. They integrated Chainlink. So again, Chainlink hasn't hit an all-time record high this cycle. The last all-time high was May 2021, middle of 2021. Same time Dogecoin hit its all-time high, right? And when I look at these cryptos, right, XRP already hit its all-time high. No major announcements, no major moves, no major integrations. But Chainlink, they're reducing the public supply of the coin by putting into their reserve. They're getting government-level integrations in the United States. The banks are basically being forced to integrate Chainlink, if you guys didn't know that already. They're not being forced or using or even part of the conversation with XRP. And again, if they were with Ripple, that's different than XRP. So is that bullish for XRP or is it bullish for Chainlink? Again, as an analyst, in my opinion, and again, that's all that we talk about on this channel, my opinion, is that if I were to look at the two, I would invest in Chainlink versus invest in XRP, even at this point in the cycle, because of all the integrations that they're getting and their reduction of the supply, where Ripple, by selling the XRP, is increasing the circulating supply, which is what the market cap is based off of. And so this is a big difference between the two. This is also a big difference between what Swift is doing and what the XRP army expects with Ripple. And so Chainlink and Swift have expanded their collaboration with a new system allowing financial institutions to manage tokenized fund processes directly on their existing systems using Swift and the Chainlink runtime environment. Chainlink said in a statement, "This shows how institutions can access blockchains without needing to upgrade to new infrastructure, replace their existing process, or integrate new identity and key management solutions. The first use case is involved in a technical and operational pilot with the UBS Tokenize, the in-house tokenization of unit of UBS, which is a bank, extending prior work with the Monetary Authority of Singapore's Project Guardian initiative. This solution utilizes Chainlink CRE, which is the runtime environment, alongside the Swift financial messaging network to trigger subscription and redemption workflows for tokenized funds without requiring institutions to replace their legacy systems." And by the way, The XRP army for years have been saying, but Cryptoviser ISO 20022 compliance is only on XRP. Not anymore, guys. Not anymore. The Chainlink runtime environment receives ISO 20022 compliant Swift messages, which in turn activate smart contract events in the Chainlink digital transfer agent technical standard according to the project. And so, yeah, they have the integration. They have the banks. They do, not Ripple, not XRP. And so again, where do I invest? Right? Which is highly interoperable? Well, Chainlink is. This week, just at the beginning of October, there were 20 integrations of Chainlink standard across 6 services and 8 chains: Zero G, Arbitrum, Binance, Canton Network, Ethereum, Plasma, Solana, and WorldChain. And you can see the whole ecosystem here. And meanwhile, with XRP, they have significantly less interoperability. I don't know whether that was on purpose, by design, or it's a technical issue. But they just got USDC recently. But other than that, XRP is not interoperable. That's a problem. Now, there's a lot of people who don't think it is a problem. But basically, I've been laying this out for years that interoperability is key. Getting the banks on board is key. And Ripple, to this day, have not been able to get in a shorter period of time what Chainlink has been able to do. There's 2,500 projects in the Chainlink ecosystem. 2,500. They even have Deutsche Börse, which is an international exchange organization, an innovative market infrastructure provider. We have all of these. The DTCC, which is part of the stock market, UBS, PNB Paribas, another bank, Schroders. I mean, this is a bigger ecosystem connecting TradFi with DeFi. And I'm not taking away what Ripple has built, because they have built this cross-border ecosystem. But again, when we're looking at investability, you tell me. And that brings us to Internet Computer. Bob Bodley, who is a Bitcoin expert and Bitcoin NFT maximalist, I guess you could call him, he said Odin Fun is in fact not running on Bob Bodley's computer. As cool as that would be, it's a decentralized Bitcoin application built on the Internet Computer Protocol. Now, a lot of people in the Internet Computer ecosystem been commenting on my videos that when we were talking about the hack that occurred on Odin Fun, saying, but Cryptoviser, it's not even built on Internet Computer. And I'm like, what are you talking about? Yes, it is. Odin Fun is an Internet Computer ecosystem project built on the Internet Computer to cross-chain DeFi into Bitcoin. It's not built on Bitcoin and cross-chain interoperated onto Internet Computer. Bitcoin doesn't even have that ability. That's the whole conversation, and I think positive integration that Internet Computer allows. He continues and says, if you hate ICP and you don't know anything about ICP, you most likely fall into that camp. Here's everything you need to know. Internet Computer Protocol is a Bitcoin sidechain that provides fantastic protocol primitives for building Bitcoin apps, the best of the best. He said, 1, Bitcoin Light node running fully on chain. 2, threshold signing subnets to sign legacy and taproot Bitcoin transactions for Solana, Ethereum, etc. 3, it's a Bitcoin bridge to leverage Bitcoin on Internet Computer through Chain Key Bitcoin, which is Internet Computer's interoperability feature. 4, it provides fast finality, just 2 seconds. 5, it's cheap on-chain native storage, just $5 per gigabyte per year. 6, WASM or WebAssembly based, so you can build smart contracts with TypeScript, Python, Rust, C++, and more. 7 is its decentralized website hosting. Serve it up straight from your ICP smart contract. 8, no gas fees or network fees. This is called chain abstraction. 9, decentralized oracles and indexers. 10, on-chain recurring automated processes. 11, on-chain randomness. And he said, we built Odin Fun on Internet Computer because it's the best place to build Bitcoin apps. It has everything we need. No new tokens needed. Log in with your Bitcoin wallet. Only sign in once every 48 hours. Fast finality. Fantastic Bitcoin integration technology. Put it all together and you get Bitcoin apps with a phenomenal user experience that feel Bitcoin native. Bitcoin DeFi at its finest. And we know it's being used. We know, regardless, that there was a hack earlier in the year on the Odin Fund platform, which is, I believe, from my understanding, a smart contract vulnerability that was clearly fixed. What we can see is that it's being used. And Internet Computer is literally at all-time record lows, or very close to all-time record lows. The all-time record low is about $2.90 or $3. And now we're sitting at the $5 range, right? The all-time record high, it says $700, but I would say like $100 is probably a little bit more fair because Internet Computer was clearly manipulated in the previous cycle by some of the big trading desks. But now we're in a new cycle, and the Internet Computer definitely has a lot of technology. I mean, you can see a Bitcoin maximalist is basically stating like, that ICP is the place to build if you want to build and have interoperability with Bitcoin, because it's what he calls a Bitcoin sidechain. But it can do a lot more, and we've covered a lot of the AI capabilities, the deployment, the hosting of websites and dApps within the Internet Computer Network, and the robustness of the Internet Computer's ecosystem, which continues to grow and continues to develop. And so again, XRP or ICP? You tell me. And that brings us to MicroStrategy. Actually, before we go to MicroStrategy, I wanted to cover a few other things here. Midnight collaborates with Google Cloud to scale zero-knowledge applications. Now, if you guys are not aware, Cardano's ecosystem spun up a new blockchain called Midnight. And as you guys can see, Cardano still has not hit its all-time record high, even though the maximalists in the community said, Cryptoviser, you're going to be wrong. We're going to hit $5 this cycle. I mean, we haven't even hit $1 this cycle. Okay, and people were like, Cryptoviser, you're still waiting for 25 cents? I'm like, actually, I'm not waiting for any number because I'm not interested in purchasing this coin. But then in 2025, Cardano announced that they were going to be launching this other network called Midnight. And it's, to me, that says that Cardano doesn't have the functionality. Very similar to potential what's going on with XRP as well. And it is what it is, right? Whether you agree or not, I mean, there's still no interoperability. There's still no native stable coins on Cardano. And that's a problem. And so why would they have to build another blockchain if all of those things and the privacy and all of this other stuff could be built on Cardano? It can't be. That's why they've launched Midnight. And I haven't really covered Midnight because a chain that's creating another chain because their first chain can't do things, it's like, why even cover it? But now it seems like they have Google on board. The Midnight Foundation, an organization dedicated to advancing Midnight Network, announced a strategic collaboration with Google Cloud to advance the privacy-first infrastructure development and zero-knowledge technology as essential infrastructure for the next generation digital systems. Midnight was engineered specifically to solve the challenge of basically privacy on chain, right? So all of your payments and receiving of money isn't public, right? Based on research by IO Global, which is the team behind Cardano, the Midnight platform natively integrates zero-knowledge smart contracts into its protocol architecture, creating programmable privacy that enables selective disclosure at unprecedented scale. This unlocks entirely new categories of applications. And so under this collaboration, Google Cloud will operate critical network infrastructure, including running a validator for Midnight and other infrastructure services to support the network's growth. This delivers the reliability and performance standards required for enterprise deployment and developer adoption. Built leveraging confidential computing from Google Cloud, Midnight's zero-knowledge proof system protects private data, including removing the operator of the environment from the trust boundary, along with hardened protection against cloud service provider access. Midnight's work with Google Cloud also extends beyond infrastructure. Mandiant will provide advanced threat monitoring and incident response capabilities to developers building on Midnight, delivering the security assurances essential for adoption across regulated industries. So, congratulations to the Midnight team. I sincerely mean that. But this, goes back to the Cardano maxis. Like, they see this and they're cheering it on, and it's like they still haven't dumped their Cardano. Two separate networks. One is more advanced than the legacy one, and the legacy one has showing no strength to hit its all-time record high. And there's a lot of people who think it's going to, but if you look at most of these coins, a lot of these legacy coins haven't hit their all-time highs in 2025. Some of them didn't even hit it in 2021. And I think this is going to be a continued scenario that continues to play out. And this brings us to, where we should be putting our money. And maybe it's not in these Bitcoin treasury companies or Ethereum treasury companies. Maybe it's in the next big thing. By the way, Avalanche is talking about creating their own treasury company, eyeing $1 billion. So Avalanche is going to be supposedly sometime in 2026 merging this SPAC company, Mountain Lake Acquisition Corp, and they're going to create a $1 billion Avalanche treasury. That could be bullish for the coin. But again, end stages of the cycle, it may be too late. Maybe not. We'll have to wait and see. But it could also be a good buying opportunity in a bear market to buy that up. Because Avalanche, let's take a look at Avalanche's crypto price. Right now it's at $30 when I'm recording this. The all-time high was $145. Again, 2021. So 4 years ago. Is it going to hit that again? I mean, it would basically have to almost 5x from where we're at. And they're talking about building this treasury next year. And so that brings us to where we do need to invest. I mean, I showed you backed earlier in the video. I don't necessarily know that there's any substance to this pump in backed, but we've been talking about the Bitcoin mining companies that have pivoted to AI. And regardless of whether AI is in a bubble or not, the infrastructure for AI is going to continue to expand and continue to grow in demand. And the supply is very limited right now because of energy, because of infrastructure and all of that. And so these companies that have the infrastructure capabilities like Iris Energy, like Bitfarms, like Hut Mining, I believe that they're going to continue to do well into a bear market as long as infrastructure continues to do fairly well. I mean, even if energy prices move up in 2026, that's going to make it even more lucrative to have these deals from the big AI companies with these Bitcoin mining companies that have pivoted to AI and are growing out their energy pipeline because they're going to need it. And it's not slowing down. While AI, the front end, the large language models, may be in a bubble, they're going to continue to expand and grow and build, and they need the infrastructure regardless, which is the HPC, high performance compute, and energy to run all of these servers and all of the data to be able to, make their AIs effective. And so I hope that this kind of explained a little bit more of my investment thesis and strategy. I am not bearish forever, but I am bearish on where we are in the cycle, 18 months since the Bitcoin halving. And a lot of these coins have already hit all-time highs. And while we're very close to the all-time record highs again, we're not pushing through them very hard. And that tells me that things are weakening. And what we need to do now is make sure that we're in coins that have fundamentals, not pumpamentals. Because just because you think XRP should be worth more, based on all the data, Chainlink should be. Because Chainlink is getting the banks. Chainlink got Swift. Chainlink is getting integrated. And it's being forced by the US administration, which is very pro-Chainlink technology. And so meanwhile, you have Ripple selling their XRP on the open market, not making these partnerships. They have built out their network, but is it to the level that we're going to see if Chainlink has the banks? And then we talked about Cardano at midnight. right? Is Cardano the play, or is Midnight the play, or is neither the play? We've also talked about the strategy companies, Bitcoin, Ethereum. This is the head of digital assets at Van Eck. He said MicroStrategy president in New York City investors meeting, sounding confident. The takeaway is a major rating agency is likely to initiate coverage of MicroStrategy perpetual preferreds in the coming quarters, opening the door for insurers and pensions to buy. Well, of course, the MicroStrategy president is confident, the same way that Michael Saylor is confident in his thesis. But that doesn't mean that they're going to have a credit rating agency. Maybe they will, but that doesn't necessarily mean anything either. The same way that everybody was anticipating we were going to have MicroStrategy in the S&P 500, and that didn't happen. This is a non-proven company thesis and strategy. And if you look at the other companies outside of MicroStrategy, Nakamoto, ProCap, Sequins, these have all gone down 80, 90, 95% just in 6 months, as have many of the Ethereum treasury companies as well. This is an unproven thesis at the end stages of a bull market. What's going to happen if Bitcoin drops to $70,000 to all of these companies? What happens if we go into a bear market and the liquidity dries up? These are things we should be thinking about, and hopefully you are. Don't forget to give this video a free thumbs up, hit that subscribe button down below. Let me know what you guys think in the comments, and I'll see you on the next video, Crypto On.